Harmony Gold Mining has reported a headline loss per share of 32 cents for the March quarter due to a fall in production and higher costs. That was down from a profit of 49 cents in the December quarter. Joining me for more is Graham Briggs. He's the CEO of Harmony. Graham, thanks for coming in this afternoon.
Afternoon, Steve.
As you say in the commentary, you were hit with shaft closures and also safety-related stoppages during the quarter. Production down 10%. How much of that was due to the restructuring that you're undergoing at this stage?
6% of it was. So there was 4% other reasons and 6% was due to restructuring.
And of course, you're just partway into this restructuring program. You announced some shaft closures last month. You announced some in the final quarter of last year. When will we see this restructuring complete? And what's the end result going to be?
Well, hopefully, Stephen, you know, what we're aiming at is a real good operation where we've got better grades and better cash costs. And we have amongst our portfolio a lot of older assets with older ore bodies. And some of those ore bodies have been mining for over 60 years. The in Evander, probably about 50 years. Some of the ones in Free State up to 60 years. They're just depleted and they've been mining at very high cash costs because they're very low grade. Hopefully we're getting near the end of that. It's been 7 different shafts over the last 7 months that we've either closed or indicated we're going to close.
And as you close down those shafts, obviously you're looking at new projects coming on stream. You've got exploration projects in Papua New Guinea. When do those shafts being closed down get replaced with new ore coming on stream?
Well, a lot of our South African projects, of course, we've been spending a lot of capital and they're just in the early stages of build-up. So Doornkop is building up very nicely. We can see the grades from the South Reef starting to come through. Pakisa, a lot of commissioning issues there and we're getting over those. And the development takes quite a long to build up in a deep South African operation. But, you know, they're all going to be very good assets. The other asset in Papua New Guinea, Hidden Valley, this quarter that we're going into now should be a normal quarter. So we should be over all the commissioning issues there.
Now, the market was looking for a slightly better figure than you did report, apparently 22 cents versus your 32 cents. But as you said, you've been hit with restructuring costs. You're going through this program, also exploration costs. So, I mean, do you think that, was the number in line with what you would have projected at the beginning of the quarter?
Absolutely. These results for us are dead in line with what we're expecting. Some issues on some of the operations, so we had a little bit of down on the gold. But if you look at the sort of going down a little bit of the gold and the costs, you know, the guys manage their costs very well. So the sort of strategy of where we're going to is very difficult quarter on quarter to measure, but we're actually on the right path.
Okay, your total cash costs $829 an ounce, and that's clearly not where you'd like them to be.
Yep.
Where can you bring them in the short term?
Stephen, if you look at our South African operations, and that's all our cash costs are because we haven't got anything else in them now, and you compare them to other South African operations, we're actually doing not too badly. If you look at our rand per ton, for instance, we're the best in the market. It's our strategic advantage. Clearly what we've had against us a lot is the grade. And the grade in those operations, like some of the Evander operations and the Virginia operations, when you have 3.5 grams, you really struggle to make any money out of that and very high cash costs. So clearly all the new projects will change us and change us permanently into something which is going to be a real good company with much better cash costs.
What sorts of resistance are you meeting from the unions, though, to this restructuring? Because as you close down shafts, I'm sure that the National Union of Mine Workers must be resisting some of this.
We have obviously some good debates with the union, but we've got very good cooperation from them. We're fortunate in that we're building up on some of the operations as we close down. So we've got lots of opportunities to transfer people and move people around. And we're coming up with some unique, sort of ideas amongst the union and ourselves on dealing with these things. But clearly, you know, we're still in discussion in the Free State and the Virginia operations. But we're having, I think jointly we'll manage them together.
Will you be a net shedder of jobs, or do you think you can deploy most of the people from those shafts that are closing down?
No, we will be shedding some jobs. There's no doubt about that. We won't be able to accommodate everyone. The build-up just doesn't fall quite in line with the sort of dramatic cut down that you do. So in time we probably build up again, but right now we're going to be shedding some jobs. How
about progress being made at the President Steyn gold mine, the one that you bought from Pamodzi?
No, it's going okay. It's obviously a little bit difficult. Those operations are standing for more than a year and they were just lying fallow, if you like. We spent a lot of effort and money on actually getting the infrastructure back, and that's what we need to get back first before we can get into full production. They did produce some gold, but not as much as they should have from the underground operations. On surface, we going quite well. Rock Dump and the President's Stain plant producing gold.
Well, you do mention in the commentary today new avenues for growth, and we've spoken previously about organic growth, acquisitions, developmental projects. What are you looking at this stage? I mean, would you perhaps look at more acquisitions such as the President's Stain mine?
Well, Stephen, where it's sort of, you get the good synergies, it's worth looking at it. But, if there aren't any synergies, then it's probably not worth looking at. But the President's Stain, immediately adjacent to operations, it was easy to do. You can see the synergies. We're looking less and less at acquisitions because it's quite, it is a difficult market. But we really focused a lot on exploration in Papua New Guinea, and we've done quite a bit of exploration in Joel, as well as in Evander area.
Of course, we've seen the rand weakening a little bit over the past month or so. Some analysts really expecting it to weaken in the second half of the year, which would, of course, be good news for you. Yep. Because while we've seen record euro and sterling gold prices, almost at that record dollar gold price, we're nowhere near the record rand gold price. So what do you think is going to be supporting this gold price going forward? We have seen investment demand coming through. We've seen the gold safe haven status coming through. Do you think that can be sustained?
Certainly. I think, the gold market is like that. People, investment demand, and there's quite a lot of fear factor. Whenever you see things happen, you see gold change dramatically and the gold price go up. So there's a lot of fear. So investment demand is still quite strong, I think, for gold.
And of course, we know that the many investors don't want to invest in gold company shares because of all the things you've been talking about, cash costs, and etc. But even if they are buying ETFs or physical gold, that's still going to support you going forward, isn't it?
Absolutely, yes, for sure.
So where would you expect the gold price to go from here? Do you think we could break this $1,200 an ounce level?
Yeah, we're bullish on gold, there's no doubt. I mean, we see a long trend, of gold going up. The rand is a bit of an unknown factor, but we have to manage our operations a little bit more conservatively. So when it comes to managing the operations and planning parameters, we're a bit more conservative, but we think it's great. There's a good future for gold, and of course that's why investors should actually invest in some gold companies, because they actually have a bit of a different leverage than just the pure gold angle.
Well, let's hope they're watching you today.